Hey, guess what? Mortgage rates closer to 7 and 6 after this past week. So today I went up with real estate. We're looking at three things, clearly interest rates. Job growth accelerated modestly and consumer confidence falling as the cost of living keeps households a little uncertain and certainly squeezed when it comes to the monthly budget. And stay with us until the mortgage tip because today we're going to have a memorable Memorial Day homeownership truth and in regards to the kind of country so many people pay the ultimate price for. So we're going to dive straight in, starting with rates. Rates moved above 6.5, and that matters because buyers don't shop the headlines; they shop monthly payments. And Freddie Mac latest primary market survey shows the average 30-year fixed rate rose to 6.51 as of May 21st, 2026. That is up from recent lows of 5.98 in February. The pressure is coming from inflation concerns, rising global bond yields, and of course, the geopolitical uncertainty connected to the conflict in Iran. Now, here's the important part. Higher rates usually slow demand, but NAR reported that April pending home sales still rose ever so slightly for the third straight month. Keep in mind, we are nearly 1 million units below the traditional market. So let's keep that into perspective. That tells us, really that buyers are cautious, but they're not gone. So if rates are moving higher, but pending home sales are still rising, what should buyers and sellers take from that?
Mac, I'd say they need to take away that timing the market perfectly is a myth. If they're ready, they should focus on what they can control: monthly payment, negotiation strategy, and long-term goals. But hey, Mac, when rates jump, what's the first practical step you give your buyers to keep them from panicking?
Recalculate. Got to recalculate. Higher, when we invite folks to visit with us, especially at contract, before contract, we want folks to have an objective overview of as much of connected to the financial numbers, connected to the mortgage as possible up front, so that if we do a good job up front, we know that things are going to end well at closing. Here in Houston, HAR's April market update showed single-family home sales up 4.4% year over year, pending sales up 9.4%, and active listings up 6.5%. So locally, buyers have more options, but rates still control affordability. That means the right strategy matters even more, especially in the market where sellers may be far more flexible today than they were. We've been an advocate that we believe we're entering into a buyer's market, or as close to a full buyer's market as we've seen in many, many years. And so if your buyers and agents are higher rates slowing your conversations, or motivated buyers still moving forward, drop me a slowing or still moving in the comments below. Buyers and agents, are higher rates slowing your conversations, or are motivated buyers still moving forward? I had a conversation with an agent this just past week, and we agreed that in the current market conditions, that people that are buying homes are generally people that have to, for whatever reason, and or let's not forget the first-time home buyer. Clearly, the first-time home buyers have been a big driver in the market. So when rates are up, buyers are still shopping, and sellers are trying to remember where they put their 2021 confidence. And let's move on to job growth accelerates. The labor market just sent a message to the economy, and don't count us out quite yet. ADP's NER Pulse report showed that for the 4 weeks ending May 2nd, private employers added an average of 42,250 jobs per week. That implies a monthly pace of nearly 170,000 jobs, which is a strong number. And why does this matter for real estate? Well, because jobs support household income support loan qualification, and loan qualification supports demand. And jobs also support sentiment. And we're going to talk about that. But here's the twist. A stronger labor market can also keep inflation higher, keep inflation pressure alive, which can push mortgage rates up ever so slightly. So how should we explain this to a buyer who hears jobs are strong and thinks mortgage rates should automatically fall?
I'd tell them strong jobs are great for paychecks, but not necessarily for lowering rates. When the economy looks too strong, investors get nervous about inflation sticking around. More inflation risk means bond yields rise, and mortgage rates often follow. So strong jobs help buyers' incomes, but might keep rates elevated.
So, agents, are your buyers more worried about rates, job security, insurance, or taxes right now? Drop the biggest concern in the comments below. And so, even though the job market looks strong, there's mortgage rates are still moody and flexing upward. And, not sure what to do about it other than find a way to put a stop to what's going on in the geopolitical scene and see if we can bring some confidence back to the market. Thanks. And we're going to break.
Tired of home service hassles? Introducing HOA Share, your trusted partner for local services. The only HOA platform that pays you back. Earn cash back on every service tracked in real time. Easily manage payments, all in one place. From plumbing to home cleaning and more, HOA Share connects you to trusted service providers. Connect, buy and sell, get notified, and more. HOA Share, your HOA finally worth something.
Hey, yeah. So thank you, HOA Share. Homeowners can connect with trusted vendors, manage community services, and participate in a platform designed around, are you ready for this? Transparency. Could you imagine? That is the number one issue that people have with the Homeowners Association is transparency, community engagement, better access to services for your home. Moving on to talking point number 3, we're going to talk about consumer sentiment. I don't know about you, but I'm feeling this. And consumers are not just worried, they're telling us the cost of living is wearing us down. And it feels like financial repression. And the University of Michigan consumer sentiment data showed a sharp decline, with sentiment falling again as higher gasoline prices, supply disruptions, and inflation's concerns weighed on households. And I see a lot of posts out there in a multitude of different industries where they're trying to keep some sort of optimism alive, connected to what's going on in the market. And hey, I get that, right? I do get that. But ideally, we're not dealing with the problem. And I'm going to leave it at that. And I would just encourage you to wake up and let's deal with the problem. And the problem I just mentioned in one of the previous segments, and it's directly connected to leadership, especially on the geopolitical scene and what's going on globally. And if you want to comment or discuss it or debate it, one of the most important takeaways is that consumers are worried inflation may spread beyond fuel prices or remain a long-term problem. I think that's legitimate. That matters because consumer sentiment affects confidence better, spending behavior, big decisions, including whether to buy a home, sell a home, move, remodel, or wait. And the pain is not distributed evenly. Lower income consumers and households without college degrees tend to feel increases in gas, food, insurance more quickly. So when we talk about the housing market, we cannot just talk about rates. We have to talk about the full household budget. Reuters reported that consumer sentiment fell to 44.8 in May, with rising living costs and gasoline prices weighing heavily on consumers. University of Michigan related reporting also showed higher inflation expectations. So what do you think people miss when they only look at mortgage rates and ignore consumer sentiment?
They miss the human side of the equation. A buyer might technically qualify, but if they're worried about their overall cost of living, they might hesitate. Sentiment shapes confidence.
True story. I worked with a couple last weekend and, not quite sure what happened, but we made an offer. And then Sunday evening at 10 p.m., they're texting their agent and concerned about their job. I believe those concerns are legitimate. I believe that I wrote sort of a quick essay on my LinkedIn page that, things may be great on Wall Street, right? But Main Street is where the home buying activity occurs primarily. And, the big investors, aren't out competing in the real estate market, which we are super, super grateful for. That's a whole different issue. But I can tell you that people are just genuinely concerned about making big decisions. And here's what we do know, here's what we do understand, is that people borrow money because they believe their future is going to be better than the present. And I believe that the sentiment connected to the leadership that we're experiencing and undergoing is reason to maybe question that. And and if you're watching, and if you disagree, I welcome it, right? But objectively, that's what we're trying to do, is to be objective in our analysis and affect some level of change when it comes to how the current housing market is operating. I saw a post on Housing Wire that, well, we need to deregulate. And I thought, oh my goodness. So tell us how bad deregulation has been for the housing market, please.
Well, Mac, let's just say we've all seen how that movie ends. Deregulation often opens the door to shortcuts and risk. We learned the hard way in 2008. Overconfidence and underregulation led to a crash. Guardrails exist for a reason. In today's market, objectivity, not wishful thinking, keeps us all safer.
Objectivity keeps us all safer. So consumers are stressed, gas prices are up, and the budget is getting squeezed from every direction, which brings us to today's mortgage tip. And we're going to reflect here. This is Memorial Day weekend. The mortgage tip is simple. Freedom is not just something we celebrate. It is something we are responsible for. And I believe you cannot be responsible if you don't have an objective view of reality connected to your industry and to the geopolitical situation that we find ourselves in today. And whether we are talking about housing, money, leadership, truth, or the future of our communities, I think we owe it to those that have served to be serious people, not fearful, not distracted, not people who confuse noise with truth. In real estate, truth matters. The true payment matters. The true cost of ownership matters. The true affordability picture matters. The true risk of waiting matters. And true opportunity in front of us today matters. A buyer deserves more than a sales pitch. The seller deserves more than wishful thinking. An agent deserves a lending partner who will tell the truth early enough to protect the transaction. And we are a believer in E to the power of 4. That is our process. We believe in educate, empower, execute, and experience. So when we educate the buyer, we empower them. When we empower the buyer, we give them the confidence to execute. And when execution is right, the experience is better for the buyer, the seller, the agent, and everyone involved. It's not fancy. No, it's just old-fashioned preparation. So here's my challenge this week. If you're thinking about buying, do not guess. If you're thinking about selling, do not assume. If you're an agent, do not let your buyer walk into the market with only a pre-approval letter. We believe in strategy. Comment plan below if you want us to cover what a real strategy should include. And if you want to talk through the situation with yours truly, book a conversation, one-on-one free consultation with yours truly. And you can find our address or our calendar at #MortgageMack. Now let's move from mortgage to markets. I cannot comprehend how any man can want anything but the truth. The truth is not always comfortable, but it is always useful. In real estate, the truth might be the payment, the inspection report, the appraisal, the insurance quote, or the fact that markets have changed. But the truth gives us the chance to make better decisions. Avoiding the truth only delays the problem and usually makes it more expensive. Hey, agree or disagree, the best real estate professionals are not the ones who tell you what you want to hear. They're the ones who tell you what you need to know. So Marcus gave us truth. Now we are going to balance that with our fun pun segment. And so are you ready?
Oh, I'm ready. Let's carve into it whittle by whittle. Let's hear those puns, Mac.
When I first saw the gray hairs, man, I'm telling you, I wanted to die.
Why are most plants thin? Well, they're just light eaters.
Yeah, I was thinking. Drunk law school students.
Struggle to pass the bar. And I break.
Yeah, and I break into song, you break into song, we all break into song. If we cannot, when I cannot find the right key. And choosing cremation is definitely thinking outside of the box. And well, before the National Association of Dad Jokes files a formal complaint, let's just wrap this up for today. Happy Memorial Day, everyone. And thanks for joining us for this week's episode of What's Up with Real Estate. Big thank you for our sponsors. Rate, Listen reports, HOA Share, and today's discussion helps you better understand what is really happening in the housing market. Please subscribe, follow, comment. And if you want to plan, not a pitch, contact yours truly at #MortgageMack. And remember, knowledge is the key to making the best decision for you, your family, and your clients. Join us here every Saturday, 10 a.m. right here, LinkedIn and Facebook. And until then, stay informed, stay engaged, and I'll see you at Condozy.